All right, welcome. Today, we're going to connect the dots between a few headlines that, on the surface, look completely random. But as you're about to see, they're all tangled together.
So what do these three things have in common? A trade deficit, a massive crypto move, and a nuclear deal. I know, it sounds like the setup to a really strange joke, right? But stick with me, because by the end of this, you'll see exactly how they're all just gears in the same giant global machine.
Okay, so here are our puzzle pieces for today. We've got the U.S. trade deficit hitting a near-record high, a mysterious $200 million crypto transfer, an entire state demanding billions from the federal government, and then this, a major development in the Iran nuclear deal. They feel totally disconnected, but they're not. Let's start with the forces we're a bit more familiar with.
First up, Part 1, the traditional levers of power. We're talking about the classic stuff here: government data, international trade, and the policies of central banks.
Okay, just look at this number, negative $901.5 billion. That is a huge number. It represents the United States goods trade deficit, which just hit its third largest level since 1960. That's a massive gap between what the country buys from the world and what it sells.
So how does a deficit that big even happen? Well, it's not some abstract theory. It's pretty simple math, really. As you can see here, in December, exports, that's what the U.S. sold to the world, went down by $5 billion. But at the exact same time, imports, what the U.S. bought from the world, jumped by over $12 billion. It's that imbalance that creates a deficit, and it has some huge economic consequences.
And you know, this kind of financial tension doesn't just happen between countries. It happens right at home. I mean, check this out. The governor of Illinois sent a formal invoice to the president for $8.6 billion because of tariffs. This is a perfect example of how these big national trade policies can create very real, very expensive conflicts within a country's own borders.
And if you ever wonder if this stuff has an immediate impact, look no further. This table says it all. When official data, like GDP, comes out and it misses or beats what everyone was expecting, even by a tiny fraction of a percent, trillions of dollars start moving in minutes. A negative surprise, like we saw in Q3, can send a currency tumbling. A positive one can send it soaring. The reaction is instant.
But that's kind of the old world, right? The game is changing. So for part 2, let's look at our next puzzle piece, the new digital currency. This is all about how huge amounts of capital are now flowing completely outside that traditional system.
Okay, now picture this: $200 million. Moving from a private, anonymous wallet straight onto a crypto exchange. And the whole thing takes just a few minutes. That's exactly what happened here. A single transaction by someone we don't know has the entire market buzzing and trying to guess what happens next.
Now, to really get this, you need to know what a whale is. We're not necessarily talking about a bank or a hedge fund here. A whale could be a single person or a small anonymous group with enough capital to cause serious waves in the market with just one move. They're a massive and totally mysterious market force.
And what did this whale move? A stablecoin. Now, you can basically think of a stablecoin as a digital version of the US dollar. So this wasn't some speculative bet flying around the system. This was a direct transfer of massive liquid cash, and now it's sitting on an exchange ready to be deployed.
This really breaks down the process. A huge transfer like this is rarely just about moving money for storage. Shifting hundreds of millions in stablecoins onto an exchange is a powerful signal. It tells the market that somebody is getting their capital in position, getting ready to make a very, very big move into other assets.
Now for our third puzzle piece. Let's call this the geopolitical wildcard. This one isn't directly about money, but it's the kind of thing that can shake both the old and new financial worlds to their very core.
So a potential nuclear deal with Iran is back on the table. And look, this isn't just about politics. A successful deal could reintroduce a huge amount of Iranian oil to the global market. And what does that mean? It could potentially lower prices at the pump for every single one of us. On the flip side, if the deal fails, it could create instability and send those same prices soaring. Okay, so we have traditional economic data, a massive crypto transfer, and a geopolitical negotiation. How in the world do they fit together? Let's connect the dots and solve the puzzle.
So here's how the machine connects. It very often starts with a geopolitical event, just like the Iran deal we just talked about. This creates a shockwave of either stability or, more often, a whole lot of uncertainty.
That sentiment, that feeling of uncertainty, it then ripples through all the traditional markets. We're talking stocks, commodities like oil, and of course, currencies.
Eventually,
all of those movements in the markets, they start to show up in those big economic numbers we saw at the very beginning. Numbers like GDP, inflation, and that huge trade deficit.
And in response to that data, what happens? The central banks, like the Federal Reserve, they have to make their move. They use their powerful tools, like interest rates, to either cool down or stimulate the economy.
And that final policy decision, that's the domino that pushes capital all across the globe. Investors start moving their money, looking for better returns or just for safety. And they're not just moving it in the traditional markets anymore. They're moving it into the digital world as well. And that creates the perfect environment for a crypto whale to make a move, which brings us right back to where we started. Full circle.
So you see, every signal from a trade report to a crypto transfer to a diplomatic cable is a piece of a much larger story. The question is no longer if these things are connected. We know they are. The real question is, in a world this wired together, where will the next unpredictable shock come from?